Bismillah ar-Rahman ar-Rahim. Ladies and gentlemen, Assalamu alaikum and very good day. First of all, let me congratulate TEFLA's and Solvent Extractors Association on the 25th year celebration of Globe Oil India, which has indeed become a great brand in our edible oil conferences and a very successful story for last 25 years. I am also grateful to Globe Oil, the Solvent Extractors, Mehta Bhai, TEFLA's Kailash Bhai, to give me yet another opportunity to speak before the August audience, although virtually. It was indeed my desire to attend this conference physically, but unfortunately, due to some logistics issues, I am unable to make it, but still I am with you through this virtual presentation. Now allow me to present my paper on this subject of challenges and opportunities in the vegetable oil sector, a view from Pakistan. As I always start my presentation with the Pakistan edible oil summary scenario, as we know that our per capita consumption is 20 kilogram, total consumption is 4.4 million tons, our local production is hardly 0.5 million tons, import of edible oil is around 3 million tons, import of oil seeds is around 3.3 million tons, and the oil extracted from the imported oil seeds is around 0.9 million tons. The edible oil structure is very diversified. It has got import duty, which we call regulatory duty. Then we have got additional import duty, the sales tax, and income tax. I know that India have reduced the duties many times when markets were very high, but unfortunately we couldn't do. Now let's see whether India changed the tariff structure in the coming months or not. The statistics as far as the import of edible oil is concerned, our imports are almost consistent. In 2019, we imported 3.09 million. The most of the import was RBD palm olein, then RBD palm oil and crude palm oil, and there was also soybean oil. In 2020, our import was 3.035 million. Olein still command the majority share. In 21, we had 3.092 million, again slightly higher than 2020. The olein share came down, the RBD palm oil share went up. Not primarily that our buying pattern changed, but the availability of RBD palm oil was more as compared to RBD palm olein. In the current year, January, August, which I maintain my statistics as the calendar year, you could see that we have imported so far till August 1.6 million, which is the statistics basis arrival. And you will kindly see that the olein numbers are lower than the palm oil. Again, the same story that we are getting more RBD palm oil competitively than the RBD palm olein. The soybean oil has been 70,000 ton, but in the second half of 22, when we will get an opportunity again to speak, our soybean oil import will increase because soft oil prices came down. So, but in any case, our import will remain between 3 to 3.1 million ton in Pakistan. The percentage-wise, Indonesia still occupy a very major share. Now it is almost 90% this year. To be precise, it is 89.43 and it ranged between 80 to 90% now. And Malaysian share obviously is coming down with hardly 10 to 11%. That is why the Malaysian origin prices sometimes are higher than Indonesian. That's why obviously it's a price conscious market. So buyers prefer to go wherever the cheap oil is available. This is the graph for Indonesia, Malaysia. The oil seed duty structure, ladies and gentlemen, is a less complicated structure, but still we have got huge sales tax. The import duty is not that great, but sales tax is very high, and then we have very famous advance income tax, which we have to pay before earning the income. The production of local oil seed crop, again, a very pathetic story, unfortunately. The last year in 2021, our total production was 374,000 tons, and cottonseed oil occupies the major share. And the last year, 21-22, we had around 460,000, which is less than 500,000 ton. So obviously our oilseed indigenous production is not going up. And with the current flood scenario in Pakistan, unfortunately, the crop assessment is not yet there. And it is very difficult to assess the damage, particularly in the crops, because water is still holding. So let's hope that crop is not too damaged. Otherwise, our local production will further go down of the cotton seed, rapeseed, and sunflower seed. Let us see the oilseed statistics, ladies and gentlemen. It's another huge import Pakistan have to carry out. In 2019, our import was 2.5 million ton. Our soybean import went up to 1.7 and canola 778,000. In 2020, our soybean import further increased to 2.1 million ton and canola rapeseed to 794. But in last year, again, you could see that soybean imports went further high to almost 2.5 million tons, and canola rapeseed was 833,000. So last year was our huge import of 3.3 million tons. And in the year 2022 till August, the volume is not that great so far, but yes, the booking is there. The soybean we imported so far is 1.438 million tons, and the canola rapeseed is hardly 118,000 ton. This was primarily that Canadian canola was not available because of the crop issues and the logistics issues. Pakistan did buy rapeseed from Black Sea, but due to Ukraine and Russian war, the shipments were delayed, and now some shipments have started. So the number looked less, but in the next 4 months, this number will improve. Here you would like to see, ladies and gentlemen, that the import of soya beans increased by 39% in 2021 over 2019 and by 17% in 2020. This is primarily because of more acceptability of soya meal by our poultry feed industry. Canola seed supply from Canada was a huge challenge. However, Pakistan was able to buy rapeseed and Black Sea and Australia. Black Sea origin was delayed, as I mentioned, but now the vessels are coming, and there will be some consistent supply of rapeseed from Australia, Black Sea, and even Canada at the end of the year. Another story which coming for the forward months is that so far Pakistan have already booked soybeans of additional 654,000 ton and canola rapeseed of 444,000 ton. That is 1.098 million ton to be shipped arrived during September, December 22. So you could see that we still have got huge appetite, and we are expecting almost another million ton to arrive by the end of this year. We have also imported soybeans rather around 650,000 ton and canola seed around 110,000 ton to be shipped and arrive next year between January, April 2023. Let us deliberate something about the market facts, which are obviously very interesting nowadays. The Malaysian palm production has been, I would say, slightly lower last year as compared to 2020. And this year also, the production is expected to be slightly higher than last year, but we expect it will range around 18.5 million tons. Indonesian palm production looks good, but the statistics are everyone's guess. So we still believe that Indonesian production might be higher than the last year because now there is no COVID, so supply will improve, production will improve. So we are expecting Indonesian palm to give us around 49 million tons. US soybean crop looks all right so far, although we are in the middle of the weather market. It was 115 million ton last year, so we are expecting this year 121 million tons. Argentinian soybean crop is still not too good. In fact, slightly lower than last year. The expectation is around 43 million tons. Brazilian soybean crop is also a bit compromised. Last year was 140 million ton. We are expecting this year to be 126 million ton. Indian imports of edible oil have been quite constant. In 2020, it was 13.18 million. Last year, 13.13 million. And so far in their November-August period, it is already they have bought 11.07 million ton. So I feel that maybe in 2 months more, they will again touch more or less the same numbers which they used to buy every year. Malaysian stocks of palm oil in August 22 were 2.094 million tons, which is indeed a good improvement, and stocks may even go up till October. The interesting part of this presentation is this, that the highest we have seen on MDAX this year was Malaysian ringgit 8,172, an unprecedented number if I recall correctly, and that was on 1st March 2022. And the lowest was Malaysian ringgit 3481 on 8th September 2022. There is a swing of around 135%, which is indeed an unprecedented swing within 6 months, which no one can anticipate. I have never seen such a huge swing, and this has caught many people on the wrong foot, but market is a market, you cannot fight with it. COVID did affect the entire logistics in Malaysia, Indonesia, as workforce was forced to reduce to contain spread of virus, and shipping was a nightmare due to exorbitant freight rates and non-availability of suitable freight. However, post-COVID, not only supply is improving, but freight rates have also come down, which is indeed a very good sign for the market. I think the industry will agree with me that the freight rates and availability of freight was a major issue in last 6 months. But lately, the freight rates are so low, particularly container freights, particularly to Far East and China, have collapsed. So has the tanker market. So this will give some sort of a breathing space, and it will help to make a proper CNF price for the destination markets. Production is gradually showing signs of improvement, and stocks are building up at both the origin, that is Malaysia and Indonesia. This is the reason we have seen huge correction in the market. Definitely, you will agree, ladies and gentlemen, that the markets corrected so fast and so huge that it was definitely a nightmare for many destination markets, including Pakistan. Soya oil, soybean complex remain very uncertain due to weather market. This Chicago Board of Trade and soybean oil, soybeans also came down heavily in physical market as well as on the index. But still this market remain very, very uncertain. We could see someday it goes up 200 points and someday it's become 150 points down. And this is the pattern which we are seeing every day, because there are so many uncertainty in the world that on the one side, inflation is going up, the monetary policy is getting tight everywhere, the interest rates are going up, and obviously there are some COVID news coming here and there from China as well. So fundamentally, there are many impediments on the market to assess properly what the direction would be. Canadian canola crop, which was extremely compromised during last 1 year, is showing some better results onwards November 2022. It's a good sign for the oilseed industry because Canadian canola is considered to be a good crop for good seed for Pakistan as compared to Black Sea. So we are hoping that by end of the year and by early next year, Canadian canola will be in a full swing. Obviously, I am expected to give some forecast also, but as I always say that when everything is clear, nothing is clear. The market facts being deliberated upon do give us certain directions. We have seen huge correction in prices of edible oils in last 3 months, and those who were long have been caught on a very wrong foot. But I must admit that practically everybody was long, including Pakistani buyers. So everybody had a very, very tough time in last 3 months, like all other destination markets in terms of pricing. At current global prices, parity at destination is reasonable, and it's good time for buyers to buy and average down their exorbitant cost. I'm not too sure about India or any other destination, but from Pakistan point of view, there is no doubt that we have got very high price inventory in our hand and we are losing money. But the opportunity lies in covering. And at the moment, the market giving us parity, local markets is obviously better than the global prices at the moment, but much lower than our landed cost of the stocks in hand. But I feel that these numbers will give certain buying opportunity to the buyers, so it will be good for the market. Keeping in view all these deliberations, my view is that it will be very challenging to break Malaysian ringgit 3,500 on the MDAX. As I said, that whenever the market goes down, buyers are there and buying does come. This is more significant as the forward months are even higher. I therefore believe that market to range between Malaysian ringgit 3,500 to 3,800 till December 2022, and then it may further improve. This is my assessment practically from the destination parity point of view. I am fully cognizant of the fact, as I mentioned earlier, about the global inflation, about the Fed rates, about crude oil prices going down. But you see, whatever is workable at destination give us bit confidence that demand will come at lower numbers. So I don't think market have much room to go down. It will go down slightly, but at any lower numbers, there is a buying opportunity. As I always conclude my presentation with a quotation, so this time my quotation is, some people dream of success, while other people get up every morning and make it happen. So I request all of you to get up every morning and make it happen. Thank you very much to all of you and wish you a very successful year.